Good day, Junior Techies. I'm Mrs. Brimacombe. We are going to look now at November 2019, Accounting Paper 1, Question 2. It is important to take note of the mark allocation and the time allocated for each question. Again, I'm going to emphasize this every single time. Make sure that you stick to the prescribed time per question. You don't want to end up not finishing your paper. If we look at this question is focusing on concepts and tangible assets. Please remember that fixed assets, the movement of fixed assets, can form part of paper 1 and paper 2. In this November exam, it formed part of paper 1. Question 2.1. Indicate whether the following statements are true or false. Write only true or false next to the question number. Question 2.1.1. The depreciation of tangible assets affects the cash flow of the business. That is false. Depreciation is a non-cash item, so it won't impact the cash flow at all. Question 2.1.2. The assets are recorded in their original cost in the records of the business. That is true. We always have to show it at the historical cost. That's the GARP principle applicable here. 2.1.3. One asset register should be prepared for all the tangible assets owed by the business. That is false. The purpose of a ledger, the general ledger, is a summary of all my assets. If I look at equipment, vehicles, land and buildings, accumulated depreciation on vehicles, accumulated depreciation on equipment. But if we want to know what is our individual assets, a record of all of that, we have to look at the asset register. Question 2.1.4. The value of land and buildings is depreciated at cost price method. That is false. No depreciation is calculated on land and buildings. The value actually goes up. So we never calculate depreciation on land and buildings. 2.1.5. Accumulated depreciation is regarded as a negative asset. That is true. It will be subtracted from the cost, the original cost. This forms part of your tangible asset note, which is non-current asset. Note number 3. Question 2.2. The following information was extracted from the records of Majoro Traders for the financial year ended 31 December 2018. The business is owned by brothers Peter and Joe Majoro. So when you start this question and an exam, make sure that you familiarize yourself with the question and with the answer booklet. Take note that on your answer booklet, they've provided figures for you and they've asked that all calculations must be shown under equipment and vehicles. It is specifically indicated under 2.2.2. Note, indicate the workings in the sections provided in your answer booklet. We will first look at vehicles and then we're going to move on to equipment. Please remember, when figures are given to you on the answer booklet, do not change the figures on the answer booklet. Keep it as it is. If we now look at what has been given to us with regards to vehicles, an extract from the post-closing trial balance on 31 December 2017. So they provided us with vehicles and accumulated depreciation on vehicles is a question mark. It means we need to calculate it. The following assets were bought during the current year, that is 2018. So if this is the post-closing trial balance on the 31st of December 2017, that means it's the end of last year, the previous financial year. If we look at the additional information that needs to be considered, a vehicle for 90,000 was acquired on 30 June 2016. There's a reason why they provided you with that date. Our current year is 2018. This means if you look at accumulated depreciation on vehicles, we will need to calculate what is the accumulated depreciation from the date that we've purchased that asset until the beginning of the accounting period, which is 2018. The second bullet, a second-hand vehicle was bought on 30 September 2018, which is the current financial year. No vehicles were sold during the current period. Vehicles are depreciated at 20% per annum on carrying value. Carrying value means that you need to use the book value. The balance of the accumulated depreciation on vehicles after taking the above into account was calculated at 40,060 on 31 December 2018. Depreciation for the current year has not been calculated. So this question is a little bit more complicated because I first need to update what is my accumulated depreciation on the asset. We need to calculate the depreciation on the old plus the new. And take note, they didn't provide us with the cost of the new vehicle. So how do I start this now? If I look at my timeline, and we're going to focus now on the old. It is important to take note. My accounting period ends 31 December each year. So when I'm calculating depreciation for the first time on that vehicle, I cannot calculate it for 12 months because we didn't have it from the beginning of the accounting period. If it was purchased on 30 June 2016, it means that we have to start counting from July until the end of the accounting period. This means that depreciation must be calculated for 6 months when we're calculating it for the first time. So this is just what I tend to do in a question, like an exam. I will write a fixed asset register. So this is basically an extract of the fixed asset register. And I start with the first year, which is the end of 2016. The cost was 90,000. It doesn't matter if it's diminishing because it's the first time that we're calculating it. So we're going to say times 20% times 6 divided by 12. Be very careful. You have to say times 6 divided by 12 because we didn't have it for the entire year. Because this is the first time that we're calculating the depreciation, my accumulate will be exactly the same. Now, I've added a column for book value. Why? Because depreciation is calculated 20% per annum on the carrying value. If we take the cost, which is 90,000, minus the accumulate, it equals the book value. Now I can calculate it for the second year, which is 2017. The book value is 81,000 times 20%. So the depreciation is 16,200. To get the accumulate, we take last year plus the depreciation of this year. That equals the accumulated depreciation. Now we can calculate the book value, and we've got two options. You can take the cost minus the total accumulated depreciation, or take the book value end of last year minus the depreciation, and it gives you exactly the same answer. Now we have basically updated our accumulated depreciation on vehicles. For the current financial year, we need to calculate the depreciation on the old, the remaining for 12 months. We need to do this using the book value, 64,800 times 20%, my depreciation for the current year is 12,960. To get the accumulate, take end of last year plus this year. To get the book value, we take end of last year minus the depreciation, or you can take the total cost minus the total accumulated depreciation. It gives you exactly the same answer. Now, I didn't need that part now for this calculation. I only needed to calculate what is the depreciation for the current financial year on the old vehicles. We have to calculate now the depreciation for the year. Remember, the second-hand vehicle was bought on 30 September. So they didn't provide us with the cost. So we cannot calculate depreciation on using the cost because that is unknown. So what have they provided me with? They did say to me the accumulated depreciation at the end was 40,060. And we have just calculated the accumulated depreciation in the beginning of the current financial year. So to find out the depreciation for this year, we're going to take the end balance minus the accumulate in the beginning, which means my depreciation for this year is 14,860. This will include the old plus the new. So to find out now what is the depreciation for the new vehicle, we are going to take the total depreciation minus the depreciation on the old, which we've calculated. So make sure that you use the same answer that you've calculated on top. And that equals my depreciation on the new. Now, if we purchase this on 30 September, it means we need to calculate depreciation from the day we purchase it until the end of the accounting period. Because it's on 30 September, we're only going to start counting October, November, December. This means it should have been calculated, or it should be calculated for 3 months. This means that the depreciation on the new vehicle that we've purchased was calculated on the cost, which is unknown, times 20%, times 3 divided by 12, and that equaled 1,900. So to get the cost price of the new vehicle, the cost becomes now my x, and now I just need to solve x. So to get x alone, we're going to take 60x divided by 1,200 equals 1,900. So to get x, we're going to take 2,280,000 divided by 60. The cost of the new vehicle was 38,000. To complete this now on our tangible asset note, we're going to start with the cost in the beginning. They provided the cost in the beginning, 90,000. We have calculated the accumulated depreciation on the old asset in the beginning, 25,200. It must be shown in brackets. Cost minus accumulate equals the carrying value in the beginning. The total depreciation for this accounting period on vehicles is the balance in the beginning minus the balance at the end. So let's rather start with the balance at the end minus the balance in the beginning. The difference is my total depreciation for this year. Additions, we have calculated the cost of the new is 38,000. To get the cost at the end, it's the beginning plus additions equals the cost at the end. There were no asset disposal at carrying value. To get my total movement, it is my additions minus my depreciation. It ends up being a positive amount. To get the carrying value at the end, you've got now two options. It's the carrying value in the beginning plus my movement equals the carrying value at the end. If you take the cost at the end minus accumulate, it should give you exactly the same answer. So just to recap some pointers with this question, specifically with vehicles. We needed to update the accumulated depreciation. You needed to realize that a post-closing trial balance was given. That was the end of the previous year's balances. End of last year balances becomes your opening balance in the current financial year. Once we've calculated the accumulated depreciation in the beginning, we were given the accumulated depreciation at the end. It means we could find the total depreciation for this accounting period. The total depreciation minus the depreciation on the old, so we needed to start with that part first. That equaled the depreciation on the new, and once we've got that, we could calculate the cost on the new asset. Next, we're going to look at equipment. Again, extract from the post-closing trial balance on 31 December 2017, so it's end of last year's balances, is the opening balances for the current financial year, which is 2018. They said equipment was bought for cash and on credit, but it was on the same day. So depreciation on the new would be calculated from the day we purchase it until the end of the accounting period. Keep this in mind now, because it was on exactly the same date, we could add those two together. But if we look at the additional information that needs to be considered, on 31 May 2018, Joe, which is one of the partners, bought outdated equipment, a cost of $2,400 at a loss of $500 from the business. The book value of the old equipment was $840 at the beginning of the current year. Bought new equipment on the 1st of June as follows. Equipment bought on credit at a cost of $25,000, so this is the information given here. Additional equipment was purchased for cash on the same day, so again this refers to information B. At year end on 31 December 2018, $9,000 was still owed for equipment. Equipment is depreciated at 10% per annum on cost. So if you look at equipment now, it's important to understand that depreciation must now be calculated on the new, on that which we sold, and on the remaining. A reminder, on the new, it's from the day that we purchase it until the end of the accounting period. On that which we've sold, from the beginning of the accounting period until the day that we have sold it. The remaining of the old is always equal to 12 months. Now don't get confused with at the end of the year 31 December, $9,000 was still owed for equipment. When we're calculating now on the new, as I've mentioned earlier, we bought for cash and on credit. Both were on exactly the same day, on the 1st of June, which means when we're calculating from the day that we've purchased it until the end of the accounting period, both will be for 7 months. That's why we can add the two together, and then we're going to say 27,000 times 10% times 7 divided by 12. Do not forget about the 7 divided by 12. That equals the depreciation on the new equipment that was purchased. On the assets sold, It's from the beginning of the accounting period until the day that we have sold it. We sold it on 31 May 2018. They provided us with the cost, 2,400, and depreciation is calculated 10% on cost. So 2,400 times 10% times 5 divided by 12 equals the depreciation on the asset which I sold. To get the old, this is where learners find this a little bit challenging. Please remember that that equipment at cost includes the cost of the asset which I disposed of, which means I've already now calculated the depreciation on the asset which I've disposed of. I only had it for 5 months. Depreciation on the remaining, on the old, is always equal to 12 months. This is why I need to take the cost in the beginning minus the cost on the asset which I disposed of. Then I can times it by 10% to get the depreciation on the old or the remaining. My total depreciation is now the new plus that which we sold plus the old, that equals 4,035. To work out the carrying value on the asset which we sold, you can draw a T account if you'd like to. The asset disposal. If we're going through the steps with the asset disposal, step number 1 is take out the cost. Step number 2, update the depreciation on the asset which you've disposed of, which we've done. The third step, take out the total accumulated depreciation. I was not provided with the accumulated depreciation on the asset which we've disposed of in the beginning. Keep that in mind. The next step, step number 4, record the selling price. Step number 5, indicate or calculate if you made a loss or the profit on the sale of the asset. If I sold it for more than the book value, it means that we've made a profit. If I sold it for less than the book value, it means we made a loss. If I look at what has been given to me, they provided me with the cost, 2,400. They provided me with a loss, 500. So if we look now at cost minus accumulate equals the book value. If they provided you with the book value in the beginning on the asset which we've disposed of, and you've got the cost, it means we can calculate the accumulated depreciation on the asset which we disposed of in the beginning of the current financial year. This means beginning plus updated depreciation, my total accumulated depreciation is 1,660. To get the book value, take cost minus accumulated depreciation. Another option that you had in this question, and this is why it's so important to understand your basics. If you take the book value in the beginning and you subtract the depreciation, that equals the book value at the end. And it's exactly the same as what we've calculated with the asset disposal account. The next part of this question, calculate the accumulated depreciation at the end of the year. To calculate the accumulated depreciation now, they've already provided us with the accumulate in the beginning, plus the total depreciation, which consists out of new, sold, plus the old, minus the accumulated depreciation on the asset which we've disposed of. So take note, you had to calculate what is your total accumulated depreciation on the asset which you've disposed of in order for you to solve the accumulated depreciation at the end of the year. I always suggest whenever you see asset disposal, make sure that you open the asset disposal account. Fill in the information which you've got, find the missing information. For instance here, if you want to find out the selling price now, this becomes the balancing figure. If you take 740 minus 500, if we sell it for less than the book value, it means we need to subtract that, and that equals the selling price. To complete the tangible asset note, we're going to start. The cost was given to you in the beginning on your answer booklet. The accumulated depreciation was given 7,200. Cost minus accumulate equals the book value in the beginning. If we look at our movement now, there were additions at cost 27,000. Asset disposal at carrying value was 740. Remember that the loss will appear in your income statement. If you made a profit, it will appear in your income statement. The carrying value will always appear in the tangible asset note. My total depreciation for this accounting period was calculated 4,035. So my next step is to get my movement. 27,000 minus equals a positive amount. To get the carrying value at the end, we take the beginning plus the movement equals the carrying value. Now take note of the following. If you would have completed this now directly on your note. The carrying value and the cost. If you take the cost minus the carrying value at the end, it gives you exactly the same as what you've calculated there. Take note of the mark allocation. This question was 40 marks alone. There were a lot of marks allocated to your calculations. So if the instruction says show your calculations in the space provided, make sure that you show it. If your final answer is correct, you get full marks. But if there is a mistake, no marks can be allocated then if there's no calculations. No part marks can be given to you. Question 2.2.2. Peter is not happy that his brother Joe purchased the old equipment at an amount below the carrying value from the business. Provide one reason why he had to be unhappy about this transaction and provide calculations or figures to motivate your answer. If we look at the asset disposal account, we said the selling price was calculated at 240. This is below the book value. So Peter feels that they could have sold the asset at a profit or at carrying value. We could have sold it for 740 at carrying value or plus the profit. So anything above 740 would have meant that we would have sold it for more than the book value, which means that we've made a profit. Fixed assets is a topic that learners are battling with. You need to make sure that you practice this from past exam papers. The more you practice it, the better you will get at it. Always be careful also with fixed assets. As soon as the accumulated depreciation is more than the cost, it can never be a negative, then the carrying value should be 1. So when that happens, you have to take the book value in the beginning and you minus 1 from that to get the depreciation for this accounting period. Be careful, always look out for that. Many learners calculate the depreciation and then they don't realize, but if they add the depreciation to the accumulate, that it will actually exceed the cost. So please be careful with that. Next, we're going to look at question number 3. Thank you very much. Have a wonderful day.